You're listening to an exclusive Mining Maven podcast interview, which is for information and educational purposes only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Today's interview is with Andrew Bell, Chairman of Regency Mines, and was recorded on Wednesday the 9th of May 2012.
We're with Andrew Bell, Chairman of Regency Mines in London. Andrew, thanks for joining Mining Maven today.
Good afternoon. It's nice to be with Mining Maven today.
Can we start with Minbari? Obviously, it's a focus for many investors at the moment, and there's lots of discussion in private investor forums and so on about how things are progressing. Could you give us an overview?
I think the announcement we came out with recently for a maiden inferred resource at Minbari was very positive. It was just over 90 million tonnes at a reasonable grade, more or less 1% nickel, and with cobalt, which is going to be a significant part of the value as well. The results that will be coming out in a few weeks will incorporate some of the 2008 areas not included in the 2011 drilling, and will also take account of the effect of the ground-penetrating radar that's been done over the areas. It is possible that the addition of these two factors will not only mean that the mineralized envelope will increase to something well over 100 million tonnes, but also that some of the inferred will make it up into the indicated category. And so given that we are looking for, hypothetically, at the moment our working assumption is we'd start off with a 20,000 tonne per annum plant working for 15 or 20 years. For that we need something between 30 and 45 million tonnes of resource or reserve, and it is possible that we have already delineated within the existing areas half or more of that, and that will be shown to be the case. Given that the banks, if we go to banks, expect to get their money back within the first few years, really, truly, the focus now begins to move from delineating resource or drilling out resource to looking at some of the other aspects of moving towards production.
Okay, and in physical terms, what resources do you have on the ground at the moment?
Well, in physical terms, in the ground, we have only drilled a very tiny part of this resource or of the plateau. So I think the fact that we're able to get to this level, which is a very substantial level by world standards of resource, with only a few percent of the plateau drilled, shows that there is a contained metal value of hundreds of billions of dollars of nickel and cobalt, and this potentially is something that not just our children, but our great-grandchildren, our great-great-grandchildren will be still getting nickel from. In other words, not just a major mine, but a long-life major mine is possible there. On the ground, in terms of above the ground, we have 6 drill rigs, and we have supplies and parts to do some drilling. We have a camp, we have a store, we have a little bit of an infrastructure there in Papua New Guinea, and we are ready to start a new program imminently. We will be having a joint venture meeting tomorrow, and our colleagues from Australia are over for that, and we will be deciding what our budget is and what we're planning to do this year. But as I think I've indicated, a lot of the things that we now do don't actually take a lot of money. With the 2008 and 2011 drill program and the 2008 and 2011 ground penetrating radar programs, we have done a very large part of what we needed to do to get the resource. And there'll be a lot of work digesting and bringing facts out of that. There will be possibly, within a relatively short time, there will be a bulk sample test at direct nickel with using their new technology. We may do some other test work on these resources as well.
Okay, so just to step back a little bit, in terms of the area that that this resource comes from, it's about 3%?
Yes, I think it was about 3% in the last announcement. I guess we add a percent or two when we incorporate the results of the 2008.
Okay, so up to 5% of the licence area has been covered within, or will be covered within, the resource when you release it, incorporating the older drilling.
Yes, something like that.
Okay, now, but it might be slightly irrelevant, but just if you'll empathise with me from a private investor perspective, how can you be assured that the rest of the licence area is equally prospective?
The old exploration from the 1960s on, if you imagine an oblong, and the west side of the oblong, one of the long sides going south to north, is the Mambari River, and along the slopes up to the plateau on the east side of the Mambari River, there were at various points auger drilling and sampling from the 1960s onwards. And then if you go along west to east, along the shorter southern side of this oblong, that is the Aruma Valley, the Aruma being a small river that feeds into the Mambari, and it's really along the Aruma slopes and up onto the edge of the plateau where we have done our drilling, because the access is easier there. But the historical drilling shows that right up to the north of the plateau there is mineralization in places, and by going onto the plateau, which people haven't done before, and doing a little bit of drilling, we this year proved what we began to prove in 2008, which is a considerable depth of mineralization and a continuity of mineralization on the plateau. So I would say that it's statistically likely that the plateau, which has the right rocks, the right weathering profile, will contain a very large body of lateritic nickel and cobalt.
Okay, so looking at the existing resource area, you effectively have completed the drilling you want to do for resource purposes, but now you're focusing on the next stage of the process. What, in very simple terms, does that mean?
It means that we will be looking at value engineering solutions on this. In other words, how, for the minimum possible outlay of money and following the best possible critical path, we can add most value to the project and move it along the road to production. Some aspects of that include, for example, the metallurgical test work with a sample, working out the size of that sample, defining the grade, working out how much we need to define in terms of resource in order to be able to make a decision to proceed, working out what scale we want the initial operation to be on, given that the direct nickel technology is modular, so we could start with a small scale, working out, given the infrastructure works that may be needed, what is the minimum sensible scale to start operations on. In other words, moving into the preliminary feasibility stage very quickly.
Great. Now, looking at the other side of the coin, as it were, from a technological perspective, how are things progressing with direct nickel?
Direct nickel has fallen a little bit behind its timeline because of the difficulty of raising funds for their pilot plant. The phase one of the pilot plant, which really consists of every element except the ion separation at the beginning, is in place. The problem is that in order to show with a new process that the whole thing works, you have to have that ion separation unit, and the ion separation unit is quite expensive. Even though that is a very well understood technology, there's nothing novel about it at all, so it really hardly need to be tested. The costs of running the plant with 42 engineers and people on it are high for every day it's there, so the decision has been made not to run it properly and start testing samples until we have all the elements in place. So we need to help direct nickel so they don't fall behind that timeline. They have promises of funding, but that's from agencies that take a little bit, or companies that take a little bit of time, their technology partners. We want to help them make sure that they have availability to that funding and can plan ahead so that they do get in a position where in the second half of this year, early in the second half of this year, they're able actually to start the first sample 90-day process of test work. Each sample tested after that will be about 30 days.
Okay, so we know generally it's a difficult marketplace at the moment, but what is there any specific issue about funding that causes concerns?
For Direct Nickel, yes, Direct Nickel starts as a private technology-owning company, and it's much easier to get people to back exploration than to get them to back technology, even when the technology is a much higher chance of success. And I think the same team that put together DLI also put together Nautilus, which is doing subsea mining and will actually start off PNG, having raised hundreds of millions in the London market and been through many years, early next year. And in fact, the biggest shareholder in that now is Alisher Usmanov, the Arsenal shareholder, who people may be familiar with through reading the back pages of their newspapers. And if you get to the near back pages, Nautilus hasn't really started to feature there yet. But when they do start their subsea mining, it is going to be a revelation in terms of the technology, the skill that's gone into this and the enterprise. The sad thing is that the people who set up that company have been so diluted through all the progressive fundraisings, they hardly own any of it. So when they had what they thought was the even better concept, which is reflected in the DNI, one of the things they've been concerned with is not to go through the same disastrous dilution process. I have every sympathy with them because I know how difficult it is setting things up and getting them going and being diluted in the process, because it's happened to me too. But with the advantage of having a venture capital type model and a private company, they have tried to do it on the basis up to now of only having up rounds and not down rounds in funding and keeping the value up, and that's made it very difficult for them. They could have raised the money many times more easily, particularly at earlier stages, by accepting lower valuations, and they haven't. There's been a trade-off between the time it's taken to do things and raise money and the price at which you got it. We're now at the very last stage of this. They're about to enter the public market arena, and I think there's more flexibility on their side, which they've shown, and this is making it easier to raise money. But of course, when the technology is proven to work, the payoff will be immense, and they want to be there for that, and I have every sympathy with them. We, on the other hand, of course, have a very strong interest in getting it done very quickly. So we have to discuss this, as we do discuss it between ourselves, to find an optimal way forward that doesn't perhaps totally please us and doesn't totally please them, but we end up by getting the job done.
Okay, so recognising all of this, how well protected is the technology?
We believe there is a good patent estate protecting this technology, and there are little gaps in between which are not protected by patent deliberately, but which rely on know-how. And the thing about a patent, of course, is that it is then something that is readily accessible by other people, including potential competitors, people who may have an unscrupulous attitude towards patents in some countries, and people who are willing to take risks and try to reverse engineer. Therefore, having some of what you do as know-how, which doesn't have to be disclosed, as well as technology, forms a part of your patent strategy. And that has been successfully conducted up till now by Direct Nickel, who've been very protective of their knowledge, but it's reached the stage, I think, where one actually has to go very fast because a lot of people begin to know about it. But yes, they're years ahead of any potential competition in this, and also well protected. Okay,
just going back to a simple thought occurs to me, and I might as well ask the question. It's an inherently simple process that you're talking about with DNI, and the key to it seems to be the recoverability of the acid that's used in the process so that you can recycle effectively. How can you patent protect something that's inherently simple like that?
I wouldn't disagree with your concept that the thing is inherently simple once you know how it's done. The difficulty is always in doing something. It's easy to explain, any good idea can be explained on one sheet of paper. It's not so easy to do. And also, once something's been done, it always seems simple. There are plenty of patented things out there that now look really obvious and logical, but I'm not sure that I agree with the premise of your question.
Okay, thanks, Andrew. So you mentioned about coming to market with this particular technology, and that obviously you have had some plans in place, but that's been a little deferred as well. What's the status on that listing?
Direct Nickel is doing a reverse listing on the Australian Stock Exchange. Of course, although they may have some money which will be coming into them, which will be earmarked for the technology coming in from technology partners, one of the things you have to have, apart from the right number of shareholders to get listed on the ASX, is $1.5 million plus 1 year's working capital, which means they need free and unencumbered a certain sum. Now, to raise that in the market at the moment in Australia, I don't know how much you know about the state of the ASX, and particularly in relation to mineral projects, but it is not a good funding environment, and you would probably sacrifice something on valuation, and then you'd run the risk that once you started trading, the price would trade down. So I can understand why they're not relishing that. The question is whether it's financeable at any price at the moment, because a lot of people, I was talking to someone in Australia from a leading broker this morning, maybe the leading broker, and he said he doesn't know of anyone doing an IPO in the next 1 to 2 months. So I think that's the answer in relation to the technology directly. In relation to the joint venture, which has license to the technology as well as Membari, we have considered getting a listing for that to finance it. But I think before we make the final decision on that, we will look at what our 2012 plans are, and we'll know that better tomorrow. Ideally, we would have a separate structure, but again, we don't want to have a structure that is not valued by the market. And if that's just a matter of time, then let's give it time.
Now, moving on to Australian exploration, you've released a couple of RNS, one in March and one very recently last Friday, on exploration activities. Can you give us an update there?
Yeah, we've got a portfolio of properties in Australia, and they've been slow to develop because we've been through an extremely methodical process of starting off with geophysics, then maybe doing some geochemistry, and only drilling once we knew we had good untested targets. And we have a process that we have to go through each time one of our project managers wants to drill or conduct exploration, where we assess the priority, the risk-reward, how much would increase value for the money spent if we were successful, and we make a judgment as to whether to do that. We've reached the point at which there are 1 or 2 further exploration phases. We're going to go into 1 or 2 projects in Australia, and I think people have seen the announcement we made about the Munginlap graphite. Now, we'd identified that a year or more ago. We did the geophysics on it. Nobody knew we'd done that geophysics as part of our program because it was a relatively small number of line kilometers. But quite a long time before the market started talking about graphite, which has all begun this year, we had started to do some work on that, identifying it as being of potential interest. So we were then able to come out with an announcement in the last few days, which is that we have all the grounds surrounding what used to be Australia's graphite producer. And now, as you know, graphite is an immensely hot subject, particularly in Canada, and everyone's looking for graphite resources. And this mine or the areas around it could be reopened because they produce large flake graphite and at high grade. And so we have something that's really well worth progressing. And we've had approaches both from an Australian company interested in listing this and from a Canadian company wanting to buy into it. And so this is an example of how our portfolio of projects there, which is being carefully managed, is moving towards maturity, and we are enabled to come out with sometimes positive developments. In the end, it will always be the drilling that tests whether something works or not. We have a sulfide discovery which we made on the edge of Munginlap and the Yilgarn, where we will be doing some further exploration, and it's possible that just turns out to be a barren sulfide. It's also possible that we get indications of gold, as in Tropicana, further up along the same trend. And all the ground between Tropicana and ourselves has been pegged by majors, and we're directly along trend. So the sulfide discovery is in itself of interest. We've also picked up some other ground along that trend where we've applied for it. We expect to be granted. So we're doing some exploration there in an extremely hot new area, which is after the Tropicana discovery. We also have the copper-gold targets, copper in particular, at Bandara that we're expecting to test later this year. That's in Queensland, whereas they're always having flooding, and so you have a surprisingly narrow weather window there. But we will be exploring. What we've always been looking for in the case of Regency Mines Australasia is a flagship project that would enable us to list this in Australia. What we don't want to do is list it in Australia with good management, with good projects, but it turns into a zombie listing because none of the projects is quite exciting, interesting enough. If there's enough headwind behind the graphite story, and we can show that the graphite we have is good, then that might change. We might be able to surf the crest of that wave. But we certainly have interesting ground and interesting projects in Australia, and we now have a great confidence in our technical team down there that have proved themselves and are now doing very effective exploration.
In terms of graphite, it's something that seems to be cropping up more and more. Can you tell us why it's the hot area of the moment?
Large flake graphite in particular, and you get more large flakes if the graphite is high metamorphic grade. But the large flake graphite is very conductive, and it has many features which are similar to those of metals, some features which are similar to non-metals, and this has always made it useful in various uses. For example, in steel plants, there's refractories and other uses, and this demand has been met in recent years largely from China, which has increased its production. They drove a lot of the world's other graphite producers out of business. Now, China, of course, is producing half the world's steel. They're finding they use a lot of the graphite they produce themselves, and as new uses for graphite begin to appear, they are increasingly reluctant to export their graphite. The rest of the world also, seeing the potential importance of graphite, wants to have non-Chinese sources available. The price of graphite has risen sharply recently. The specific uses that are driving this: in lithium-ion batteries used in a whole host of mobile devices, from iPads to mobile phones, also used in electric cars and hybrid electric cars. They use up to 20 times as much graphite as they do lithium, and the new generation of cobalt batteries is going to be the same. And now the use, that alone, some people are projecting, is going to be 3 or 4 times total world graphite production. Depends, I suppose, partly on how quickly electric cars take off. If you then look at 5th generation nuclear reactors, use graphite pebbles, they would use typically, say, 3,000 tons for the first fill, and then 1,000 tons a year needing to be replaced. And then you look beyond that to other new uses. Graphene. Graphene is a miracle product that can replace silicon in electronics. We'll have less heat generation, power demand, will enable closer integration. A single graphite layer, 1 molecule thick, called graphene, is what many scientists have been developing for a host of electronics uses, and at the moment it is typically being produced artificially, but the hypothesis is that a lot of this could be produced more cheaply using good quality graphite, and that eventually natural graphite sources will displace the artificial production and bring prices down. Now, in Canada, therefore, everybody is trying to develop graphite projects because they see all these new uses coming in. And after all, if graphite were to replace silicon in the electronics industry, that would be absolutely huge. And the sources of high-grade flake graphite known in the world at the moment are relatively few. There would undoubtedly be new sources discovered, but what can be brought in on stream quickly and get an off-take agreement, I suppose everyone is competing for that. There are a number of Canadian projects, mostly not particularly high-grade. The fact that a lot of the demand might be expected to be in Asia, that Australia is an extremely efficient mining country, and that we happen to be next to what used to be a high-grade graphite mine, and our VTEM over the area shows that most of the structures seem to be within our ground, means that we have what looks like a prime asset. And that's very exciting, because in one or other of those structures we should expect to find some graphite with the extremely good characteristics in terms of flake size, and then we might immediately have a project. And 40 kilometers down the road is a major Chinese-backed lithium producer, and we know that they, for example, called Galaxy, and we know that they, for example, are now going out looking for graphite, and we have this graphite project that they have to go straight past. So there's plenty of demand for it, and we, for once, we appear to have a strategic asset in exactly the right place and with potentially exactly the right characteristics. And that's an interesting area for us.
Okay, so I can understand the concept of, with Australian operations, looking at possibly an Australian listing when the time is right. But if the graphite interest is hot in Toronto, then why would you not go with a TSX approach?
That's a very good question. And so far, what we have had is approaches from Canada and Australia. It's beginning to spread from Canada. It's attract interest in Australia. But what we are immediately going to do is to try to get some confirmation of what we have there and move as quickly as we can. We also have offers of graphite assets that have been producers in other parts of the world, and we are looking at whether we should be trying to develop into this field, because we could do it quite cheaply and we have a good starting point. So that's one area that is very interesting, new materials. Another area that is very hot at the moment, people are looking at, is the demand for titanium dioxide for white paint. And we have discovered in the holes we drilled in this sulfide target on the edge of the Yilgarn some very highly elevated levels of titanium, and we are going to do some more work on that to see what the potential significance might be. But those are high grades, and that may have also value. And then one metal that we already know we like very much, which is copper. In Bandara, back in the 1870s, 1880s, there was a producing mine producing very high-grade copper, and with a smelter with a chimney that one can see photographs of. And at that point in Queensland, in the late 19th century, when Queensland was even more predominantly rural and agricultural than it is now, there can't have been many operations of this size, and this area has never been drilled since. It's relatively inaccessible. We have a couple of very good targets for, at the moment, we believe, small to medium-sized copper deposits there, and we will be exploring them properly for the first time later this year. We would love to have copper because, of course, as the world gets more urbanized, you can replace a lot of things, like telephone wires, but nobody has yet found a replacement for copper wires for bringing electricity to your house.
If you're looking at the company, I think people understand Regency is Mambare and Regency is its holding in Red Rock. Then the Australian operations have, to a certain extent, been missed by many investors. Now, I can understand the concept of moving graphite because it's a hot area into its own vehicle, but would it not be better to hold the other Australian operations within the company until a discovery was made or substantial progress was made?
Yeah, quite possibly, and that's one of the things we'd look at. We began as a copper-nickel company, copper-nickel exploration in Australia. We then added the lateritic nickel in Papua New Guinea, the justification being the potential size of that deposit. We then, recognizing that lateritic nickel, the secret to it was going to be the extraction technology, the processing technology. We invested in the best processing technology there was, which many people didn't believe we got it right at the time. Now I think anybody who looked at it would conclude that we had backed the winner there, or the most promising technology. And we still have carried on with our exploration in Australia. And finding nickel in Australia is not easy, otherwise everybody would be doing it. And finding copper in Australia is not easy. And also, in Australia, you're competing with some of the smartest mining people around. And the fact that we are now getting close to some very good targets and developing it, it shows that we have reached maturity. And it's always been a balancing act. If we'd had to raise money for that alone, it might have been quite difficult. The fact that we had the Mambari project and that we also had the floated off Red Rock and did 1 or 2 other things that added value has meant that we've been able to pursue a fairly straight course towards our objective, but we're still aiming for the same objectives, which is to build up a base metals and base metals investment company.
And just moving on to Oracle Coalfields, you have a holding there. Can you give us an update?
Yes, the argument for Oracle Coalfields was always that the management was good. It remains good, and although Pakistan is not the easiest country to work in terms of political perception and a history of investment from here, nevertheless, the Thar coalfields are a huge resource of untapped coal, and this is the first real project there, and the easiest one to get off the ground. The lignite production will be for a mouth of mine power station with Karachi Electric Power, for which there's a letter of intent, and there will also be a takeoff by Lucky Cement, and there the coal was substitute for imports. Now, what's happened this year is that the bankable feasibility has been completed, and Oracle has got its mining license from the Pakistan government. And that mining license includes such things as financial terms, tax arrangements, and all the royalty arrangements, and all these things. So these are incredibly important developments. What Sharuk and his team have put together there is very impressive. They now need to raise money to move towards production, and that's going to be a challenge for them. The price is much too low. We have been key investors there, but we think strategically and long term this is a great investment. And the other thing that we like about it is when these initial uses have got underway, we think the potential for unlocking some of the vast, potentially 20 billion tons of coal within their license area, and they might get more in other areas, will be ways of dewatering the lignite and pelletizing it and making an exportable product. And there are a number of technologies that have looked at this, none of which have progressed, perhaps because of the difficulty of getting the pre-strip and getting a pilot plant working. Oracle should be in a good position to do this, and they have big markets on their doorstep. And we think that therefore at some point, not just the Oracle story in itself is good, but the potential for the application of technology to change an industry, as with nickel and direct nickel, exists. We remain very supportive of Oracle. The risks are always going to be that the market is somewhat unwilling to give money to companies investing in Pakistan. To an extent that reflects ignorance, but I think once it reaches the stage where you can start raising institutional money, then Oracle has a good chance of being able to take off, because the management consists mainly of ex-Shell people and people who have a good corporate business record and know the country, and I think they have the ability to perform and to carry out. The only weakness they have is that they are underfunded, but they do have strong bank support and strong technical support, and everything. So it's a really excellent company that's just not recognised by the market.
Okay, now Regency Mines has just over 663 million shares in issue. Market price at the moment is just over 2p a share. So by my basic maths, that's just over £13 million capitalisation. Doesn't seem like an awful lot, and we know that the market swings from undervaluation to overvaluation on a relatively regular basis. What should investors look for, do you think, as to the potential real share price drivers, assuming, of course, that the market is reasonably sensible in the near future?
Well, I think that the development of the Mambari story, the movement towards a feasibility study, at the same time the progressing of the technology and the test work there, at the same time new results, including ones I haven't mentioned, coming out potentially from Australia and from the backlog we have there of exploration carried out where results are coming in and are being assessed. All these things can add to the interest of the story. The end of last year was a low point for markets, and since then there have been very few companies in the resource sector that have provided any performance at all. Just a handful of names that have gone up. I'm happy to say that Regency has been one of them, and that reflects what I said in the last annual report, which is that this current year was going to be a transformative year for Regency. And so it has been. We've come out with our maiden resource at Mambari. We are beginning to come out with results from some of our exploration in Australia, and the direct nickel technology is making progress, and there's a listing of that asset on the ASX imminent. That's a pretty good story compared with many companies, and that's been reflected in a better share price performance, which we hope will continue. And we certainly feel we have the wind behind us in terms of corporate developments. We can't control the nickel price, we can't control the market. All we can control is our own little ship, and we're doing quite well.
That's a great summary. Andrew, thank you very much for taking the time to speak with Mining Maven today.
Thank you.
We hope you enjoyed listening to this exclusive Mining Maven podcast interview, which is for information and educational purposes only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Remember to go to our homepage at www.miningmaven.com to sign up for all our latest updates.